Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is June 17th, 2025, and we're diving into Vince's first quarter earnings report for fiscal year 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Vince, a global contemporary retailer, has just released their Q1 2025 results, and there's a lot to unpack, especially given the challenging retail environment.
Revenue and profitability overview. Let's start with the top line. Vince reported net sales of $57.9 million for Q1 2025, a slight decrease from last year. John, how does this impact their profitability?
While net sales decreased by 2.1% due to store closures and remodels, Vince managed a gross profit of $29.2 million, maintaining a gross margin of 50.3%. However, the net loss was $4.8 million, or 37 per share, which is better than the forecasted EPS of -47 by analysts.
That's interesting. What factors contributed to this performance?
The decrease in gross margin was primarily due to higher freight and duty costs, but Vince offset some of these with lower product costs and reduced promotional activity. Their strategic cost management played a crucial role here.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. Vince's SG&A expenses increased to $33.6 million. How did this affect their operations?
The increase in SG&A expenses, which rose to 58% of sales, was driven by higher marketing, legal, and IT costs. This led to a loss from operations of $4.4 million compared to a profit last year. However, their wholesale segment saw a slight increase in sales, which is a positive sign.
Looking ahead, what can we expect from Vince in the coming quarters?
Vince is focusing on mitigating costs through supply chain diversification and vendor negotiations. For Q2 2025, they expect net sales to be flat to down 3%, with operating income margins ranging from -1% to 1%.
Strategic initiatives and market position. Vince has been making strategic moves, including a partnership with Authentic Brands Group. Can you elaborate on this?
Absolutely. Vince entered a long-term license agreement with Authentic Brands Group, which allows them to leverage their intellectual property for wholesale, retail, and e-commerce operations. This partnership is crucial for expanding their market reach and brand presence.
How does their current market position look?
Vince operates 58 stores, a net decrease from last year, and ended the quarter with $62.3 million in inventory. Their strategic focus on high-quality products and customer experience is key to maintaining their market position.
Financial health and risk management. Let's discuss Vince's financial health. How are they managing their debt and liquidity?
Vince has total borrowings of $34.7 million, with $20.4 million available under their revolving credit facility. They are managing their liquidity well, despite the increase in net inventory to $62.3 million.
What about risks and uncertainties?
Vince is cautious about the impact of tariff policies and has not provided full-year guidance for fiscal 2025. They are focusing on cost mitigation and strategic partnerships to navigate these uncertainties.
Key takeaways. In summary, Vince's Q1 2025 performance reflects their strategic efforts in a challenging environment. Despite a slight decline in sales, they managed to beat EPS expectations and are focusing on strategic partnerships and cost management.
Indeed, Vince's partnership with Authentic Brands Group and their focus on operational efficiencies are promising. However, they need to continue navigating the uncertainties in the retail sector.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Vince's performance in the comments below.